morning, everyone. Welcome to the metal markets. I'm Market Stoker D, aka Deeyana Angelo, your host. I've been trading for almost 20 years. I've been with Topstep since 2015 in some form or capacity. I was their first female funded trader. That's how I got to meet all the team. And I trade commodities. I trade precious metals, base metals, and the energies markets. Alright, with that in mind, let's have a look at what is happening in the levels today. So we have copper accepting the value from London from yesterday. So this value area marker is from the London trading when we had some shenanigans. And I'm still looking at longs, so I would be maybe interested in running a long up to this 560 level past the value area. What's very interesting is that the London value is actually quite similar to the COMEX value low. So COMEX value is a little bit wider, but not too much. So let's attempt to run this little breakout trade. There we go. With breakouts, there's always a possibility of pullbacks, but it is a value acceptance, special situation play. So let's see if we can start the day by grabbing some cash. So gamma wall is still at 560. Not much change actually in the copper levels at all. We still have 520 to the downside that is coming up as a bit of an unusual put wall. But we also have the gamma flip that's now changed to 550. I think yesterday that was more like a combination of a gamma flip and a weaker call wall. So today is just a gamma flip. So if we go below that, that will signify the negative gamma environment, and a little bit more craziness is to be expected. But copper is pretty smooth, so it's not like it's a a jumpy thing. We do have Tokyo high coming up. If they wick above it and they can't sustain above it, then obviously the value acceptance will be probably completed at that point, and that's all we're going to get. Willing to stick with this because of the way the daily chart looks. So let's go to the daily. I was talking about the consolidation that is still somewhat happening, but it's kind of happening at the bottom third area of the consolidation, which is pretty wide. And I want to basically test a hypothesis with an actual trade to see whether we can get to the top of that. Now, at some point in the day, if it breaks out, I might increase size, but for now, this is just like a testing, like dipping a toe in the water to see whether there's anything there. And then from there on out, we're gonna be using situational awareness, but we effectively have some space all the way up to 575. When I look at some of the levels that might come in, that 590 level is still there, like we talked about it yesterday. Copper options chain is not as dynamic as some of the other ones, so the levels that I see, let's say at the beginning of the week, they pretty much stay relevant throughout the week. So you can use it kind of as a weekly plan to orient yourself. Obviously, the expectations of what the price will do depends on the time of day. Commodities are very much time driven, and much more so than the equities. So you can look for your probabilities in and around important times of the day, typically relating to the overlap, which is kind of the end of the morning session in London, and nothing much happens during that time because of nothing relevant happening in the metals, right? So once we get LME open, copper starts to make a little bit more movement, some more volume starts to come in, and then of course we have the big session of COMEX. But copper is excellent to trade during Asia. So I really enjoy, in particular, either fading the 1:32 a.m. move or running a reversal trade for the final hour of Shanghai if I'm awake at that time. Now, once I put all of these levels back, you will see the same activity that happened right after the Tokyo close. So this was Tokyo low. Pretty much immediately, the Shanghai final hour pushed around. Unfortunately, I was asleep, so I had my pillow behind me, and I did not enter into this super early because I wasn't there, so we couldn't do it. But now I have a different setup, which is the special situation play and acceptance of value. In this situation, we're looking for a sustained breakout above Tokyo high, so not just whipping through it and then ending up with a massive selling wick in the next 30 minutes, but actually sustaining above the Tokyo high. Now, because the value area from London is fairly small, I don't want to just run a rotation trade and make it stop at London value high, which would be something that I would be doing if the London value is bigger, but we don't have that option, so I'm actually shooting for a bigger target up at nearer to the gamma wall at 560. Again, that is a level that we've seen before. When it comes to the average daily ranges, they're very far away. We have the 565 coming up as the statistical average to the upside, and we have 535 roughly to the downside. So this is all within the day's range, so we don't have anything else to fall back on. So let's just see how this particular movement transpires. All right, let's have a look at gold. Gold is expiring today. And it's quite funny, when I was running the stats, I do use some AI to help me with that. And it said, well, the contract is expiring, I'm not going to give you a config string. And I'm like, well, no, dude, like, I still need the config string. Like, I know it's expiring. So tomorrow we're probably going to be rolling, well, we have to roll in the June contract, which will be GCM or MGCM. And therefore you can expect some additional hedging to happen. When I look at the actual levels in gold, let me just find it so I can have it in front of my eyes. 4,500 remains sort of a moderate call wall. Now below this entire area we still have that 4,400 level that actually brought a pretty decent area of demand intraday and pushed much higher. Obviously this was news driven, but now it's a technical demand. So there's a very good chance that if Tokyo low here can't provide a proper acceptance, and if it can't really start making headway through the Asia range, then we're going to be retesting 4,400. Just a hypothesis, not like any kind of advice or anything. It would make sense that they would need to go and grab some more contracts if they're going to do anything with it. But be careful, because rollover times can be extremely tricky and weird, and because of that I will not be trading any gold or micro gold today, but instead I'm going to wait until we roll into the new contract. Now, ADR level, if some craziness in the news comes in, is going to be sitting up at 47.41, and then the ADR low is actually not too much lower than that 4,400 level, so it's just underneath that at 43.85 roughly. So again, exhaustion of the ADR low, maybe some smash through it, then maybe a reclaim. We could have some kind of a reversal into the final day of this contract. All right, I'm going to have a look at silver now. I do have levels for it, but I did not put them yet on this platform, so I'm going to do that now. Right, first and foremost, we identify the Asia range always on metals. Not so much on some other products, but metals are definitely pretty sensitive to that. All right, so let's see. Where do we start? That's the start, so that means this is the high. And where's 530? There it is. So we need another little marker for Tokyo low. Now, silver today did not provide a bounce, right? So they bled straight down. So that looks pretty weak to me. If we get up to test maybe 6,900 or something, that could be something of interest to me. But let me have a look at the levels. so we know where the dealers are located. Yeah, so 6,900 would be the level to look out for. And then above it, 70. So not too different from yesterday. That's kind of interesting. To the downside, we have 67 as a moderate put wall. So that's actually changed. That wasn't there yesterday as an anchor. But 65 is still, an area of interest. There's a more minor level at 66, so that might bring some chop if we go below 67. But this whole area, like if I just put rough markers here, you have 69 as an options level. And then you have 70. And those are big ranges, so you have plenty of room to make some kind of opportunistic trades. But yeah, I'm not seeing at the moment, unless we retest the Tokyo low and then start to go lower, I'm not really seeing too much. Right now, silver is trying to fail the auction for London. So the London high, initial balance high, is there, and then the initial balance low is right around here. So let's put some markers there so we know what we're looking at. So, looking at it granularly, it failed the auction, and now it's attempting to create like a little 3-bar reversal, if you will. If this continues higher, the initial balance high is not too far away from Tokyo low, right? But at the moment it looks pretty weak. I'm a bit suspicious of this failed auction in silver. If it continues down, this would be a setup that I like to refer to as the weakness inside initial balance, where it goes to extend the initial balance, then tries to go back into a failed auction, but ultimately fails the failed auction, and then continues lower. That's a setup that I abbreviate as WEEB, weakness inside IB. It's just a fun word to say. So yeah, makes it easy to remember, right? So yeah, we'll see how they want to play this, but we're not really interested in silver too much today, because I do think that copper is the strongest out of all of these. So if we put micro gold, silver, and copper, I wish that I could get rid of these because they kind of annoy me sometimes. But yeah, so you can see that copper is the only one that actually has a decent movement upside from that Shanghai reversal. It's the same thing that I do towards the end of the day, right? So it's the fade into settlement, and in this case it's fade into the London Open. So it's a pretty high probability setup, but copper is the only one that's actually making a proper push in the opposite direction. So that's why I'm a little bit bearish maybe on these two. And if the correlation between them starts happening, obviously that's going to be a little bit tricky to handle, because while copper does have a mind of its own, a lot of the times if there's a major movement happening in gold, it's going to get pulled with it. So this is why I'm testing things, because we still have that headline risk, and honestly it's anyone's guess what's going to happen. But I'm still very bullish on copper in the short term, certainly for the end of this week. All right, let's have a look at crude oil, because crude oil is also something that I trade quite a bit. Now yesterday I decided to exit my trade right before the inventories, right? In hindsight, probably should have stayed in, because it eventually got very, very close to my target towards the end of the day. So that could have been one of those trades that we just held for the entirety of the day. When I look at where the current levels lie, 95 is still a gamma wall. Now here's the thing with probabilities. Whenever crude oil is kind of late with the initial balance extensions during London, these short, shallow moves, they typically are not the ones that give like a massive extension. If they extend to the upside whilst they're kind of trending upside in Asia, then the reversals typically tend to pop the IB high, then reverse rotate all the way down, and then massively start extending to the opposite direction. But that has to happen pretty early, certainly before this time. And unfortunately, we don't have that today. So this is more maybe a fade to go back up to 95. If I see something later, that might be, you know, a better opportunity. But at the moment, crude oil is a little bit in a precarious situation where I basically don't see a good, strong probability setup that has a high frequency of occurrence, first and foremost, and second of all, high excursion, right? So the amount, in layman's terms, the amount that it just goes and extends the move. So I'm going to probably sit out crude oil until a bit later. But yeah, but copper is much more interesting than the rest. Is there anything else? Let's have a look at ADRs. Okay, so we have the average London session range all the way up at 97.87, so it's quite far away from the gamma wall. And if I look at what the next level is above 95, it's basically that 100 level. So there's not, like, yeah, you've got some smaller, you know, smaller levels on the way. Interestingly, another thing is that 95 is also the gamma flip level. So not only is it a gamma wall, but also a gamma flip. So that's definitely a bit of a magnet for the immediate movement. And it's also the reason why I'm not really too keen on shorting crude oil, even though I'm kind of short biased nearly all the time on crude. I know that yesterday I wasn't, but yeah. So let's have a look at the daily chart just for orientation. All right, so we had this huge sell-off, obviously, and then we have been stuck in a bit of a... Now, whether this is a distribution or reaccumulation, that remains to be seen. So I would like to have a look at the volumes. So what's happening with the volumes? The volumes, yeah, so for now, every time they, in this situation, every time the buyer stepped in, the shorts have been actually much bigger. So you can see here, even though it was like, oh yeah, we're going up, but it was more like a slow rise, even though it's like massive ranges. But, you know, technically we have to adjust to the volatility. Every time the shorts come in, they have a lot more power in them. And yeah, so right now, I don't know, it might be a distribution, but if we take in some of the macro problems, so Strait of Hormuz is now effectively closed, right? Do we really want to be short crude oil when we're going to have so many disruptions about the on the crude oil production and transport more significantly? Because, you know, if you can't get crude oil out to the world, that's not going to be comfortable for anybody. And yeah, so let's see what happens at this intraday supply, because we do have a little supply that was created. If they cannot go above that, in that case, I will maybe be short crude, but for now, not too interested in that. So yeah, I would be more inclined to do something around the gamma wall. Whether it's going to be a long or short, I don't know yet, but if they start to really push through it, then the broken core wall can become another area of orientation for further continuation. And from what I know about crude oil around this time of day, when it extends one side, typically that tends to be like the wrong side. So eventually they kind of extend to the opposite side and keep going. Until that happens, though, that's a entirely different setup. So I really want to see it above the initial balance high if I'm going to do that. In the meantime, we just sit and wait. So starting Thursday, pretty slow. I have some profits for the week. There's a new XFA, so we're kind of very slowly building things up, and not looking to trade with size just yet. and just sticking with micros for as long as possible on the proper counts. Yeah, this is not really looking to me like a strong failed auction, so that's very undecisive. Again, it's a little bit early. You know, next week, finally UK are going to change clocks. Yay. And once that happens, we're going to be running this stream for the UK and EU people in UK 11:30. So I'm going back to the usual time. And that's the time when everything really starts kicking around. Now, the problem with, you know, right now we have this weird out of sync daylight savings nonsense. And I just find it so strange because, you know, I like to do my Euro close trades, but then you basically are doing that right smack in the middle of the New York lunchtime when the volume is a bit meh. So the probabilities are all like thrown off. And similarly, I kept forgetting that it is the that it is now time for my final, you know, end of day trading. So I have 2 more days to deal with the weirdness before we go into some normality. And we have something similar happening in November, but that's only for 1 week. But March is usually like 3 weeks of absolute hell and madness. So yeah, it's annoying at best. All right, so we have the levels. We have one trade idea with this value acceptance. It is retesting the initial balance high. Oops, I didn't do the initial balance high on copper, so let's do that. More lines, more cowbell. Right, so this is the initial balance high. What is the initial balance for those of us who have not been here for long? It's the first hour of any currently active intraday session, right? And a lot of the times you can use the initial balances, the edges, for either failed auctions or continued auctions. What you're seeing here is a retest of the initial balance initial balance high, and potential bounce from it. So that's not unusual. So usually it accepts value, then kind of goes back down. And again, copper is a bit smoother. If I was like scaling in the old way, this would be the time when I would plop in like another trade only when the 30-minute ends in about 6.5 minutes. And that would be like my second scale in, because you know you go in off the one trigger, then you have another orientation point inside the trade zone. And then once it starts moving, I would be adding another one. That's the old way that I was doing things. And while it did work on prop, I did not like the variance of the size because I stuck with minis. So it was like trading between 1 and 3 minis. And on the drawdowns that they give us, that's not... it's just... it's a little bit difficult to control the variance, right? So we want to make the curve as smooth as possible. And on tiny accounts, you have to start slow and build it up, rather than running with massive trades that only increase your risk of blowout. Let's have a look at who's in chat while I'm waiting for this. So we have What is the Crime? Raphael. Raphael is always here nearly every day. He's the first one to post, so hello Raphael. We have What is the Crime? We have Kevin, Genius Cake, Kelvin, Ani, Verti Trades, Spitz, quite like that. Puneet is here. Right, good morning Puneet. Yeah, how you doing? Brad, Damage Strikes, Omar Ahmad, Weeb, yeah, Trading Nickels, so it's W-I-I-B, right? Weeb, or Vibe, like vibe, but with a W, because I'm Eastern European. Do I trade the New York session? Yes, but I dislike trading it before the Euro close, I'll be honest, right? So I find it, especially like there are times of the year when the New York session is like really annoying, and it's like, come on, just make a move. And it's just like chopping in a range, but it's a really wide range, so... You know, I like to get involved towards the end of the day, sort of like COMEX settlement, NYMEX settlement. But on some parts of the year, the euro close reversal is also pretty tasty, especially on crude oil. Anything before then, I'm like, ew, yuck factor, ick factor. So I'm not a huge fan of trading the first part of the New York session, okay? Anytime I focused all of my efforts on like the first 2 hours, unless it's like a mean reversion trade or an early value acceptance trade, to me, the probabilities of those setups are so difficult to control, right? It's like, yeah, that will happen, but it's so much movement that you can't control risk properly. So it's either like, pop in a quick trade, scalp, and then it's done. I don't trade like that. I am a pretty calm trader. So, I like to hold my trades with wider stops and holding them for hours. I always joke how I hold trades until the cows come home. Because I look for opportunities that are intraday, but they're based off of a slightly larger time frame and outlook. And therefore they have more juice in them. So I'm pretty selective with the trades that I take. And I will almost always try to do a fade into settlement, because that is a high probability setup across a vast majority of years that I've been trading. Even if the trade doesn't work that day, I just pitch it to the 30% probability, because 70% of the time on my products, you do get some sort of a reaction there. So I like to just put my money with the probabilities and just leave it alone. It either works or it doesn't work. It's fine. But because I hold trades for much longer, I also don't want too much drama and, going, entering and then immediately drawing against me or immediately putting me in like a million ticks of profit, but then whipping back down equally fast. I don't enjoy that. I am 45. My brain doesn't work as fast. Now, if you ask me the same question a mere sort of like 5, 6, 7 years ago when I was under 40, yeah, maybe I was a little bit crazier, and I would be absolutely loving the, immediate sort of after the first hour price action. But again, these days, I just went to like the times of day in my personal account when I know it's like super high probability that something's gonna happen. So in my personal account, I actually only trade the end of day, or COMEX settlement and NYMEX settlement. So those 2 hours towards the end of my day, which usually falls at between 6 and 8 p.m. for me. That is the time when I trade my personal account. I call it my YOLO account. It's not really YOLO, but I do trade with more size there, primarily because I know how those particular setups work. So, anything in the day, I've always said I've always been more of an end of day trader than, hey, it's open, let's go. But when I was younger, yeah, I used to spend like, 6, 7, 8 hours, because I worked for a prop firm as well. And, this brick and mortar, you have to go in and you have to stare at the markets all day. So what are you going to do? You're going to try and find some setups that will work. But again, these days I'm a lot more selective, and I'm just like, yeah, unless I see something super obvious, I just don't want it. So yeah, if I'm doing mean reversion back towards value, that's one setup. If I'm seeing a reversal from the outer edge of value, so we're assaulting it, like let's say this is your value area, and then we're kind of coming to it from the upside, and I see like a lot of people plowing in on bookmap to the opposite side, that would be like a very strong setup for me. But other than that, I don't know, I just sit it out and I wait for the stronger probabilities. I know it's a bit boring, right? I don't sit here and click buttons all day long. And London is a bit tricky because it always has this 50-50 probabilities on the trade occurrence. So it's like, yeah, it might happen, it might not. So what I'm doing usually with the setups, I take the larger time frame context, and then I try to establish a position that would speak more to that larger time frame than anything that might happen intraday. And then if I see an intraday setup, I will be more inclined to run some kind of a mean reversion, because it tends to have more excursion. Now this copper trade is a bit of an outlier to that, purely because of the accumulation that we're having on the daily. So just to remind everybody, this is what the daily chart looks like. And I'm basically looking for a breakout out of this whole potential accumulation. And why do I say that it's accumulation? Well, because if you look at the volumes, you can't really see it that well here. But it's every time they try to go long, that's bigger volume. So I'm hypothesizing that they want to try breaking out. It's also based on the fact that China has renewed buying interest in copper, so there's a little bit of macro there. It's not all just like, ooh, it's value acceptance, let's go. But you know, for now, what we have intraday, we do have that value acceptance. How do we see a value acceptance? You take the value from the previous day and you wait until 1 30-minute time frame closes back inside of it. So if your stop can be somewhere reasonable, that is generally a decent way to run a value acceptance. I did get slipped a little bit here now that I'm noticing, but again, it's a quieter time of the day. Copper is usually quiet and smooth as well, but that does mean it always has like more of a spread, especially in micros. And we don't have the ability to trade the full contract because it is still not available, because I think they stopped all trading of major contracts on metals. So not ideal, but again, we have to take what we have. So for now, it's just, you know, test a trade, 1 micro. Maybe if I see something else, maybe I will increase the size, but not at the moment. So what we have the value acceptance, 30-minute time frame closed inside value. We have the initial balance high, and we're still sort of hanging above it, right? Test of previous areas of demand are definitely something that copper does. And if it's going to continue, we want it to not go too deep into the initial balance. So we want it to create some structure in and around the IB high, and then to slowly start seeing renewed interest in buying. So let me just do something here. Whoops, no. What are we doing here? That was my book map. Damn, okay. Book map just flipped out of me and decided to, yeah, so let's just leave that for another time. And lost the Topstep X as well. Okay, my computer just flipped out. That's great. I'm gonna have to get a new window because it just exploded on me. Alright, so we have Thursday gremlins happening. Why did it do that? I think it was like some kind of an update or something. All I did is I just tried to drag it into the window, and it was like, hey, yes. So let's see, what was that all about? Hold on. Oh, there's a new Ninja Trader update. I see. Yeah, we're not going to be doing that now. Right, we're just going to have to go with our book map, because... Let's go. So... full contract, copper. We're going to be having a look. Not the dome, time and sales. Because you can see the same things happening with time and sales. I prefer looking at book map because it's more visual for me. But, you know, you can kind of see the same information here. There it is. Okay. Yeah, why do these companies do, like, updates in the middle of the session? I will never understand that. Alright, so we have some buying here, stepping in, right? It's more than obvious. And so far not too big of a size here, but you know, the power of ones and stuff, it's kind of adding up. Somebody selling a little bit, but overall this is all quite a kind of pullback and then back into longs. Okay, that's fine. Can't see the little doggo. Yeah, there was I think Bond was on there for a while. Oh yeah, she's on the floor now, but you can see, I think that's Manny over there. You saw Manny the other day when I was mooing on the screen. Yeah, Trade Nickel says, I held until the platform closed my MCL trade, very much a patience trade. I don't see it as patience. You know, I'm just like, whatever. Yeah. So, yeah, Trade Nickel said, I said that to the evening Discord coaches, Coach Vince, that I held till the cows came home. Yeah. Some people think that I'm 27. Yeah, that's what normally people think. Do you not look 45? I hope not. Jesus, I mean, I do try and keep my skincare going, but you know, I think the skin is like one of your biggest organs in the body, and that if that looks terrible, you have to wonder what else looks terrible inside of you, right? And I do have some, do have a chronic illness, and some of the medicines, they do have a lot of anti-aging side of science. So maybe that, but I mean, all of my family always looks pretty young. So my mom is like almost 79, and she looks like she's in her like late 50s, maybe early 60s. And then my sister is almost 56, and she looks like mid 30s. So you know, we do have some good genes on our side. But yeah. Beach and Snow says, thanks to you, I've been limiting to maximum 3 micros, which has allowed me to grow my account steadily. Amazing. I love hearing that. Before, I would do well for a few days and then go into ridiculous sizing and blow my account in one day. That's what happens. That's what I'm talking about when I say blowout risk, right? It's your risk of ruin. So the bigger the size in relation to the balance or the maximum drawdown that you have, the bigger the size, the more chances are that your blowout potential is just in the billionth percentage. It's like, it's literally, you have no other option but to blow out at some point when things don't go well, right? But you size down and suddenly, you know, every drop in a bucket, it creates what? It creates a full bucket of liquid, right? And you have to take that approach. If you want longevity, if you want this to be like your consistent side income, because it's never going to be like any side business, right? You can't just start a business and expect that tomorrow or in 3 months you're going to be turning over, you know, 300k a year. Doesn't work that way, even in trading, right? I know that trading, a lot of people are like, oh my god, look at that person on YouTube and that person. But if you dive deeper into the experiences of the reputable YouTubers, you will see that they didn't come there overnight, that every one of us has had, you know, big journeys of like 7, 8, 10 years plus. I started in 2007, right? And then I was 27. Not anymore though. But you know, I started relatively late in life, because I know people who started at 20, 21, like for example Dre, right? Andre McHugh. He started early 20s, so did Patak. You know, everybody had that connection, but I was a session musician and a pretty high level one. So I didn't really get into trading until I was like, actually, you know, I quite like this. I think I want to make this into a career. So I actually went into prop trading as a 32, 33-year-old, relatively late, right? And, but yeah, I've always been aware of the metric called risk of ruin. And what it is basically a way to run Monte Carlo simulations on the size that you're using and on the overall combination of your average risk reward and your hit rate. So it smushes all of those three together and runs thousands and thousands of trades in a simulation and gives you your blowout potential. It doesn't care about setups, it doesn't care about timing, it doesn't care about accuracy. It takes raw numbers in averages and tells you how likely are you to blow up. And I've seen people risking like, 3 NQs. And yeah, sure, some of them will have big days, but what you don't see a lot when we're talking about like top live leaders, and apart from like 1 or 2 people on there, but I would say 1, there's like the following story, and everybody's like, why did you get these 5 live leaders? They're not always the same. You have one name that keeps cropping up. You know, that's the only name that I would invite on Topstep TV. The rest of them, you see a story where they've been on a daily loss limit bonanza sort of for 40 days, 15 days since the start of the account. And they continue to trade with size, so that one day where they make 50 grand, 70 grand, whatever, it basically saves their account. But unfortunately, in most cases, it just brings the balance to where it wants to be. And then what happens is that after such a big day, a lot of people get a dopamine hit. So they're like, well, I did it once, I can surely do it again. And then they try to do it again. And in a lot of cases, it was like an outlier day where they caught a massive run, or maybe they just had a day where, they were really in tune with the market. However, they don't have very defined systems. So that 30 grand, 40 grand, 50 grand day is not repeatable. And therefore they go back to the daily loss limit bonanza, and then very soon you never see them again. I've seen a millions people like that in prop, right? One guy comes in, starts off terribly, has one massive day, and then continues to do terribly, and then eventually they fire him. Because it's like, I actually had a colleague who was a bit older than me at that time, so we're talking, back in 2015. He was already in his 60s, and I'm not sure what he did before, but he was one of the people who was like, well, I'm older than you, therefore I know better. But at the same time, he was only trading, I think, for about 3 years, and he kept having the following pattern. He would make 60 grand one day. Then he would lose 3, lose 5, lose 3, lose 5, all the way to the point where he would be back to scratch. This cycle kept repeating for as long as I was with that firm, which was like about a year and a half. And every time he would have a massive day, he would be like, yeah, I told you, I know what I'm doing. And we're all telling him, dude, like, you have to, be a little less aggressive on the size because of the downside. No, it's fine. So he was there for maybe 6 months, maybe. And then after that, he had the talk with the risk manager. And the next thing was that he was packing up, and we literally never saw him again. But on the days when he was winning, he was absolutely obnoxious to everybody. And he kept pushing the age in the face. I know better. Don't you youngsters tell me you don't know life and blah, blah, blah. And we're like, yeah, but we're all doing like much better. Because you have like 1 month where you're up just about. And that is just enough to cover your desk fees, which you have to recoup. So if you don't pay a desk fee in the previous month, there's no more desk fees now. That's an amazing thing. But back in the day, you had a desk fee for the Bloomberg terminal, which was like $3,000 to $4,000 a month. So on the months that you didn't have enough profits to cover that, they would then roll it to the next month. So the next month it wouldn't be 3 grand, it would now be 6 grand. So if you and the firm that I worked for, it worked on the 20% payout to the trader, and then the rest of it, I think 10% would go for like permanent, and then the rest of it would go towards your risk capital for the next month in order to scale you up really quickly. But he kept being stuck in that like first part. So just as he was coming to the end of the month, he would like blow up all the profits. And then the second month, he might have ended up with like 5K net in his own payouts. And that would just go towards the fees for the terminal. And it's like, and we all tried to help, but he was just like not having it. So, some people are just not really willing to take the ego hit and to, go back into themselves and just go, you know what? Yeah, I think things definitely need to change. So, but yeah, so that's the story to take some, some pointers from. Don't be like that guy, and size down, take it slower, and it will all come to you, right? It will also expose the issues with any strategy or the mental triggers that you have. If you cannot sustain profits for long, that means you have a bigger problem, right? It's either something you're doing with, the actual number of trades or the overtrading that can kill accounts as well, right? And some people are like, well, overtrading means different things. Yeah, but, if you're aiming for 3 to 5 trades per day, and yet you end up with 30 to 50, you have to wonder what it is that you're trying to achieve there. And that's a mental trigger thing, not necessarily a strategy. So you have to exclude the trades that are complete nonsense and based on effectively your brain going into ERN mode, error-related negativity, and then looking at every loss as a mistake. So once you start realizing that losing trades is not a mistake, you can start telling your brain, hey, this is probabilities. So this time it might not work, but I've tested this and I've traded it before. I've seen it work. So how do you marry those two? You have to start doing something that is now kind of becoming a little bit better known as metacognition. So what is that? It's kind of monitoring your thought or controlling your thoughts and listening to your thoughts from an analytical perspective. So what does that mean? Let's say you lose a trade. Immediately, and we have a lot of random thoughts, right? They don't come from the rational part of the brain. They actually come from your emotional part. Whole bunch of nonsense, self-limiting beliefs that you carry, that we all carry, but how you talk to yourself on the inside and how much control do you have over your thoughts, that's very much key in this industry. In a lot of the other industries that are performative, right? So you have, sports, you have medicine, being a top-level surgeon and stuff. You have music also. You can say to yourself, I could never do that solo, but then, if you constantly say, I can't do it, you'll never be able to do it. And then, if you are analytical with your own thought process and go, okay, well, now this is outside of my skill set, but let me practice and let me see how I can actually make this into something that I will be able to achieve one day. So instead of going with the wave, with a random thought pattern that comes to you, you modify that and you just start looking at things analytically and objectively. Once you start doing that, you will notice a lot of crap kicking about in your brain, right? As you're entering a trade, as you're managing a trade, every time you want to take early profits and yet you've set a target higher up or lower down for a reason, presumably because you analyze that this is the potential of the trade, you then go, oh, it's not doing it, it's not getting there immediately. Is that based on the actual back-tested data? Or even just your own observation in previous live trades, because forward testing beats back testing any day, by the way. Back testing is just for the function of the setup. How often does it happen? What is the frequency of occurrence? And what is the MFE, MAE, so that's maximum adverse excursion, how much it goes against you, and maximum favorable excursion, how much in profit does it get to. And that's the thing you test as a back test. Everything else should be done as a forward test. You turning up, you identifying the trade in real time, and then you dealing with all of the stuff that we have to deal with as traders. So if you're exiting a trade early, what's that based off of? The fear that it may not get there, but is that actually the probability of the trade setup? So then you can start to think about it, going, okay, well, I want to exit early. Why do I want to exit early? It's fear. Okay, so what is my sizing here? If I lose this trade, how is that going to affect the account? How is that going to affect me? And you go, well, it's going to affect me because I don't like losing. Well, great. Nobody likes losing, right? But if it's just a probability set that is not working on the day and you've done everything correctly, your job is done, right? So you can't be over managing your trades to the point that you're never in them long enough to make them do whatever they're going to do. And you saw yesterday, I was in a deep drawdown, right? It was in 3 MCLs, but I stuck to it and I held it for another 4 hours after I got off the stream. And then I closed it because I was like, I don't really want to go into the inventories with an open trade. So it was a decision that I made and I still made money out of it. I should have held it longer. But I've had bad experiences in the past with holding trades into the inventories and being knocked out and then finding yet another trade. Unfortunately, yesterday I had a bit of a health issue, so I was not able to sit down and to look for another setup until much later in the day. So, that life gets in the way sometimes, and that's okay. And but the trade itself should have been, just fine. Trading nickels, held it as much as I should have held it, but I didn't yesterday. So yeah. But yeah, I had to step away from the screens and stuff, and I just wasn't able to look at the screens for a while. And I didn't find another trade, and that's okay. It's just one day, right? But I still ended up the day up, so I think I was up. Well, we can have a look at it. So this is a new XFA, by the way. We just started it. So the day was 367. So not too bad, right? So take it slowly, just taking what the day gives me, and slowly building up the balance before we start doing whatever, right? So March is always weird for me. So March is always a time when I'm not too happy with the daylight savings issue. And every time I'm in a new XFA, I always start slow. I don't do it the opposite way, right? I don't go hard and heavy on the first couple of days and then tiny little profits to get to do the payout. I do it the opposite way. I basically build it up on small size until there's between like 5 or 8K in there. Then I will take 20% out of it whenever that point comes. And then maybe I will consider sizing down again. But when it comes to adding size, I like to add 1 micro for every 2.5 grand. Do with that whatever you will. Trading in the Zone, yes, that is a great book, but it won't help you with your own mental triggers because we have different mental triggers. It's a good starting point. You know, Mark Douglas was an amazing man. He's no longer alive. But he definitely had some huge wisdom to share from a very unique perspective where he lost all of his money, if you haven't read the book. But then because he was working for clients, he had to carry on trading for them. And that enabled him a very different perspective. So he wasn't trading his own cash, right? He was just kind of executing orders for others. But, you know, that can be a huge thing, obviously. But if you don't know where your mental triggers are, like what is the point where you break, right? The point where you start doing stupid things. And there will be multiple. There will be multiple. It's not just going to be like, oh yeah, I just go off the rails when I lose. No, it's going to be little subtle things. It's going to be the market not moving in your direction immediately because it's barcoding. It will be you entering the trade and then exiting super early and then being annoyed with yourself. That's a mental trigger. Then doing a breakout trade that fails, another mental trigger, right? So it is a stop out, but what was the actual reason for the market behavior deeper than the stop out that caused you to get annoyed with it, to just start swearing, throwing things, crying. It can be a whole bunch of stuff. And until you really get self-aware, so that metacognition moment, going, why am I annoyed with this? Like, this is just some numbers on the screen. Why are they getting to me so much? What is the deep cause of this? The root cause? And then you start saying to yourself, okay, so what happened before I lost the plot? That's the point where you begin that analytical process of being inside yourself and observing your mind almost as an impartial. Yeah, there was the series called The Fringe, and it was like a weird sci-fi show with Anna Torv and the guy of Peter Jackson. Is that his name? Is that his name? And and John Noble, right? They were in the main characters. So, you know, they had this whole thing where it's kind of like X-Files, I suppose. They're investigating like weird stuff. But in that show, there were these people called the Observers, and they would just kind of pop out and observe important events in history. So you kind of have to be that for yourself inside your own head. Can you observe yourself from the outside and analytically approach whatever it is that your thought pattern is doing right now? So all the randomness of thoughts, you need to get in tune with that, and you need to start dealing with it. So it's like, let's take this trade, for example. Somebody's going to be like, Dee, how can you stay in a drawdown for so long? Because my stop is at a comfortable spot, right? So it's inside the initial balance. What is the trade? Well, it's the value acceptance trade. But I'm not uncomfortable being 32 ticks down, right? I'm not uncomfortable. I'm not going to be like, oh my God, I need to take it. In fact, in the old days, like I said, I would be adding at this point. And I still do that in my own account. Because at some point I know it's going to start moving. It's going to start moving. And if it doesn't, that's fine because my stop is exactly where it needs to be for this particular setup. And if it fails the auction, that's a completely different setup then. And I shouldn't be chasing it because that's not on my plan today. My plan is the accumulation on the daily and a continued move higher. So therefore, being in some drawdown or losing one trade, it doesn't mean that now I'm going to start going, oh my God, it's not working. Oh God, I'm wrong. I never do that. I used to, but I never do that now. I'm just like, okay, well, it might retest VWAP and then jump. But in that case, that's not a value acceptance trade. And then I would actually argue that if that really happens, that this is more value low reversal and a failed auction that's going to then rotate much deeper. Where is my next point of interest? Not until we get to Tokyo low. So I've got nothing else to do in this part. Nothing. Like literally, I don't have a setup here. I have a setup here and I have a setup up here. But this one, the only one that I was considering in light of the larger time frame context is that long as a value acceptance trade. The end, right? It will either work or it won't. There's no third option. We have headline risk all over the place, okay? That could be a huge factor in whatever happens today. So that's why small size, not doubting your setup, but just staying convicted in the setup that you're taking. And whatever happens to it is just a matter of probabilities. Today, it might be, failing the auction, but on maybe even later today, we're going to have that value acceptance. So maybe it will reoccur because actually COMEX value is exactly the same spot. So actually, if it opens underneath the value for COMEX and then accepts it, so exactly the same thing that I'm trying here, that will be the setup that I will absolutely take again. Absolutely. But we didn't have follow through here, and that's fine, okay? So, some things like that where you need to not go into your self-doubt so much and just accept the risk, commit to the trade, especially now. There are times of the year where I might exit early and go, maybe I'll want to get a better entry. But again, that opens up the possibility of entering a trade over and over, of creating more losses around the same zone, which can be incredibly dangerous and the fastest way to dig a hole. So instead of just sitting in one trade and committing to it with a decent stop loss placement, what you're doing is adding, 100 on one trade early exit. Then you try again, and that one doesn't work out either. Then you try a short because now you're seeing maybe something that is happening, against your trade idea. So you start doubting it and you're now going, well, maybe it is a failed auction. Let me flip. So let me go into short. And then it bounces outside of the initial bounce again. So now you're losing again. And before you know it, you're like 500, 600, $1,000 deep in the hole and the market still hasn't moved. Is that the right way to trade? No. To me, it isn't. To me, it's committing to your trading idea, holding on to it, letting it do what it needs to do. It either stops you out or it works out. No other option. Now, if it does start going in my direction, the only question there is, how far will it get to? Nothing else interests me. I don't want to move my stop. I don't want to take partials if I'm in more. In fact, I will add more these days. So that's what I've been working on in the last sort of couple of months. And I'm getting comfortable now, okay? So this is the point. 2 months it took me. 2 months. I'm starting to get comfortable with the idea of adding more as the trade starts working in my favor, but starting super, super slow. Does Topstep B book? Dude, we are futures, and there is a XFA and combines are the sim environment, but there is no A and B book. That's a CFD thing, not a futures thing. If you're on the sim, you're just on the sim. Doesn't matter whether you're A or B book. Our B book is the live Topstep account, which goes all the way to the exchange. But anything else, the sim is basically just sim. So there's no A and B book at all. everybody who is getting the data feed and doing their trading in the sim, that is all just a simulated environment that does allow you to take payouts, but there's no A and B book. This is just a stepping stone, right? So yes, you can take payouts out of it, but the way the prop firms have been designed now, that have evolved, not designed, but they've evolved, is to for you to prove your consistency, that you are able to manage risk, and then you get a portion of the performance in the sim funded into a real live account. That is a futures account. It's not a CFD account. It goes in those accounts, in the live accounts. It's like real orders hitting the market. Okay. So there's no B book, there's no A book, none of that nonsense. DJ Runs asking a great question. How much are you feeling that CL still drives the metals? True inverse correlation seems to be gone, but it seems like it still influences them to some degree. Yes, so that will be the case during headline risk. Whenever there's anything to do with the Middle East, crude oil becomes the driver of the movement, and then you see a lot of inverse correlation happening. But once and that will vary. So let's say that right now, let me have a look at what the correlation is. So currently the correlation, I'm looking for CL. Currently the correlation between copper and crude oil is about positive factor of 0.6. So at the moment, copper is more correlated with crude oil than it is with gold and silver. And yet gold and crude oil are actually still heavily negatively correlated by a factor of 0.9, minus 0.9. So nearly a complete inverse correlation. But copper is in its own little world, right? So it is a somewhat of a different product because it's an industrial metal, right? Whereas gold, silver, platinum, they're precious metals. So there are days when copper will be dragged by the gold movements, but there's also a lot of the days when copper is just in its own story and doing whatever. Now the headline risk is causing it to have a little bit more positive correlation with gold on some days, but today I'm seeing that's kind of breaking down. It might rise back up. We get some headline risk, it all might start kicking off again, and that is the days that we're living in now. So we have the Iranian war, and that's going to cause some heavy correlations across the board, right? Cool. JL says, what about manage the risk based on the situations these days? Things are not really working well with most of the strategies, which ignore the present moment. Listen, I've tested my strategy over the last 20 years, and the reason why I have all of these things on my chart, which I get criticized for a lot. And you have so many lines on your chart. Yeah, because I've lived through Black Swan events, I've lived through credit crunch, I've thrived through those events actually, but I've also been able to stay very profitable through most years. I think I've only had like maybe 3-4 years of my entire career that weren't consecutive where I did not end up in profit that year. Okay, and one of those was actually when crude oil died on me last year, right? That was extremely difficult, and then I went to my second market, the metals. That's why I have, multiple products. So I think it is important to understand that whenever you're looking at an isolated system or strategy or some kind of entry point that does not take events such as Black Swan, you have to ask the question, how robust is this? Like if volatility changes and the system calls for 10 ticks point stop in NQ, is that going to be relevant right now when, okay, now it's a little bit slower. But let's use crude oil actually. Let's say that you are using somebody else's methodology and they say always use 15 tick stops on crude oil. Crude oil at the moment is moving about 800 ticks in a single day. When that strategy was created, let's say it was created in the last 3 years when crude oil was much, much slower and it was moving more like 100 ticks per day. So therefore the stop loss of 15 ticks accounted for roughly about 15% of the day's range, right? But now, those 15 ticks, you're not going to live to see anything work out on 15 ticks because that's the amount of movement the crude oil now moves in seconds, nanoseconds, not even seconds, right? So you will enter a trade and it's going to be a, Hopper McTilt, my grasshopper puppet, wherever that went. Let's get some puppets out to illustrate this whole thing. So I call the entering in and out with no rhyme or reason, I call that the grasshoppering. And this is my little hopper puppet where I illustrate all of this just to make it easier for people and to talk about something that is a pretty dry subject like volatility-based stops, right? Volatility-based stops. So what is that? Why do we talk always, I'm terrible with ventriloquism, so I'm not even going to try. So why do we always talk about scaling your stops to the volatility of the product? Why does Coach Paul talk about 5 minutes ATR times 2 for your stop loss? I have another thing. I have the average session range and then I divide that by a certain number. I sometimes even scale it down to the time of day when I'm trading, so then I might be able to get somewhat of a tighter stop, but it's always based on the volatility of the product. Hop, hop, hop. Why? Because as the volatility changes, if your stops and targets are not changing with that, you won't survive. You just won't survive. So a crude oil moving 800 ticks in a day and using 15 tick stops, that's not the same strategy as crude oil moving 100 ticks a day and you using 15 tick stops. Does that make sense? Okay? So don't go into Hopper McTilt mode where you're still using the same stop loss size and you're failing to see progress. That is probably one of the reasons. Consider that could be one of the reasons, okay? So my system is tried and tested through like 20 years of madness. We've had COVID, we've had the credit crunch in the beginning, we've had the quantitative easing, we've had the crude oil crisis of 2014, we've had crude oil futures going negative, so we couldn't even trade crude oil at that point, so I moved to something else. I moved to gold, I moved to ES, and I even traded NQ. I know, right? So ask yourself, how robust is this approach? If it's only calling for the market structure on super small time frames, at times of great volatility and headline risk, that's just not something that's going to work. So you can criticize me all you want, but I've been perfectly able to survive and thrive throughout most events that have been thrown my way. Why? Because my methodology is scalable to whatever the product is doing, not what you think a stop loss should be. It's the product that decides the parameters of my sizes of the stop loss and my targets as well. The rest of it is down to realizing where the market makers are positioned. And, it's going to be, don't be in a moment where you enter a trade on a 15 tick stop on crude oil because somebody told you on YouTube to do that. And then the trade is gone in 5 seconds. There's going to be a moment of, we're in! Oh, where's my trade? What happened? Don't have moments like that. Don't have Hopper McTilt moments where you enter a trade, you're out, and you don't know why. It's because your stop loss is not large enough. Give it room to breathe, okay? Trading and trades, they need room to breathe. What is it, Bernard? I'm trying to make a point here. Bernard's like squealing behind me. I think he thinks I'm like a little bit nuts because he's like, you're not talking to anyone and you're there's nobody in the room. What is going on? He's a funny boy. So yeah, consider the robustness of whatever approach you're using. And if it doesn't mention scaling your stops to the volatility and only sticks to like rigid components, I would really be doubtful that that can survive anything that changes the market conditions. So, people say to me, I've been trading for 3 years, I'm still not profitable. Dude, you've been trading for only 3 years. Like if you were in any other discipline that requires a lot of practice and a lot of high-level skill and, methodological approach to dealing with your own issues that are individual to every single trader, would you actually be saying things like, well, I've only been performing, like I've only got into medicine 3 years ago, I'm still not a top-level surgeon. Or I've only been playing football for 3 years with my friends, and we play a lot of football, but nobody has actually asked me to do the Super Bowl yet. That's the kind of ridiculousness that we're talking about. If we go music, I've started trading 3 months. I started playing my guitar 3 months ago. I'm still not doing the Carnegie Hall Center concerts, and I don't have an arena to play at. Like what? I thought that was going to be happening tomorrow. Do you see the absurdity of that approach? I know that trading is just clicking buttons, but what happens before the click of a button? That takes years to master. Absolute years. And I'm not talking 2 years, 3 years. We're talking 5, 7, 13 years in some cases. I've known people that it only started clicking after they were like, oh my God, now I get it. And then they start sizing down, they start controlling risk, but it took them 13 to 15 years to get there, right? I've seen it. Many times, not just once, many times. Been trading for a long time. It's not working. Okay, so why? And it's always like, well, I trade out of frustration, I do stupid trades. Or the other side. Let's talk about the other side. I only look for star setups. Alright, so you're going to trade once in a blue moon then, are you? You're going to trade once in a blue moon. That's a great way to be an intraday trader. Sit down. No. Get out. Sit down. No. Get out. That's why I'm so big on situational awareness. Not just like, I'm only looking for star setups. And then the star setup doesn't come. And for a lot of people, they're like, well, I have to trade. I have to do something. Because you feel like you have to perform an activity, right? Because you're like, well, I can't make money if I'm not in a trade, right? So, yeah, never mind the star setup. Let me just enter any old trade. So what happened to the star setups? Nothing. So situational awareness and being able to have multiple levels where you can kind of look for setups, that's to me a better approach, right? But it definitely starts from knowing what playbooks you're doing. That's a hard graft, and that is where somebody else's playbooks can help you. But they're not going to happen overnight. If you do them from scratch, they're not going to just magically appear. So this is the only time when I was like, yeah, if you have somebody teaching those, like Merritt Black, he has a great course. I have one. I think my one is pretty solid as well. It's CPD certified. That tells something. There's the Jim Dalton course on profile. Even though I modified a lot of the stuff and added things to my own products because some parts of it didn't work for my products, that's still the gold standard of what should be taught in any course that's serious. Unfortunately, we have a lot of rubbish out there, right? So you have people who are like, yeah, pay me $6,000 and I will teach you how to draw a line on the chart. It's like, great. Is that all you teach? Because, let's face it, it's not a big skill. Or you have people who are like, well, just pay me, $200. And then you sign up and they're like, this is a candlestick. This is a bull flag, and it's like, that's not situational awareness either. And you just paid $200 for it. You could have Googled it. Frankly, there's Baby Pip School. I think that's still free. There are resources for basic crap that is so basic, and it can work, but it's not going to give you complete situational awareness. There's only very, very few people out there that will teach you situational awareness. And until you get to that point, you're either sticking to the extreme of I only do start setups, or you're sticking to, well, let's just see what happens and drawing a couple of lines on the chart without fully understanding the full market condition state that we're in, and without understanding what should happen at that level and why, and what is it that the market makers do every day. And that is the thing that creates intraday flow. How far do we come up in relation to the average range? How often do you hear that discussed? I discuss it, Jay discusses it. I've literally never heard anybody else mention it. Why? Because it's kind of my concept, right? So I'm big on statistical averages when it comes to ranges, to the point that I made them into levels on my chart, and that's what I track. But when I started, nobody was doing that. They were loosely talking about ATR, and I'm like, great, well, where does it stop? And I thought to myself, why don't I make a line on the chart out of this? It's not a super groundbreaking concept, but it didn't exist at the time. So I created that for me out of a need to know exactly at what point today this bloody thing can run to on average. So that's why I have, all of this. So I've got Asia range. What did Asia do? I have the value areas from the previous day. What did they do? How are we looking in relation to that yesterday to today? And where are we going to exceed? Do we also have something in the way that might make the dealers adjust inventory at that point? How they adjust, whether they go the opposite way or they go through it, that's a matter of context, right? But those levels are important. Like Hoag's weekly kickoff points. Well, these are your intraday kickoff points. So it's a very similar process, right? And it's based on a number of things. It's not like a million things, but it's about 3 or 4 things smushed together in order to give you that situational awareness. And then from that point on, all I'm looking at is how the auction is progressing. So that's where the initial balance comes in. That's where the TPO profile comes in, and just kind of tracking how things are developing through the day as you're looking at it. And you're trying to stay as objective as possible, committing to your stops, committing to your targets, no matter what execution does. You can execute badly, or you can get slipped, or you can get a big spread. But what is the trade doing? Like, where is your stop loss located? How much of a quality stop loss is it? Is it a terrible stop loss placement, or is it maybe a good stop loss placement? And in order for this trade to fail, we would really need to break down into the initial balance and completely just start running over the other side. So what I'm seeing now, if you look at where the price is, we are still outside of the initial balance. So it's teasing and creating structure. Remember at the beginning, I said I would like it to start creating some structure above or in the top part of the initial balance. Now that's usually also a form of a reaccumulation before it goes higher. This is not necessarily that, but just the way I see things, and the fact that we have this bigger level up against a wall at 560, this is still a valid trade. But the execution, yeah, that could have been better for sure. But I'm not the best trader. I really am not. But I'm also not really that bothered about timing, precision, accuracy, right? I'm bothered about getting the 560 at some point. How I enter it, where I enter, as long as the profit margin offers me 1.5 to 2R, maybe 3R in some cases, I'm happy with that, right? And then I just let it go. I do other things. I go walk my dogs, play video games. I don't obsess over it. But why? Is because my size is never so much that if I lose one trade, it's going to completely destroy the account. So I don't care about leaving it in for as long as it needs to be there. Much better way to live. Less stress, less work, less screen time. Now, when you're learning, you need a lot of screen time. Why? Because you're trying to gain experiential data. You're trying to find how the price is moving. What does the trade actually look like as it's developing? What is the actual trigger point that you're using, if there is one? So many things that you have to get under your belt in order to get more confident with your trading. But to me, I'm past that, right? I'm getting to my 20th year of trading, and it's like, I don't care about precision. I just care about getting a decent chunk of the move. And on days when that doesn't happen, I'm cool with that too. I might wait for a bit later in the day, look for another setup. And some days are range days. They are not my favorite, but I'm able to do something with them. They're outside of my comfort zone for sure, but they're still, now there are days when I can actually end up on the day. Before, there was no chance for me. Like, something opens inside the value, it starts to wag around in a range. I was terrible. I was always looking for either a continuation or a mean reversion. And then I would go into a fake out, what I now know as a liquidity sweep under the range, and I would get involved in that as a mean reversion trade. And then it would ping back in the range, and then D would be taking the entire range as a stop. It's like, not good. So I tried to learn how to get better at that. Am I good at that? No, but I'm better, right? I can actually make money on those days. Are they my favorite? Still no. Absolutely hate those days. But they occur more often than not. So to me, to kind of keep ignoring my massively weaker point of how I trade and why I do the decisions that I do, that wasn't a good idea. So I took 7 years before I figured out how to actually properly approach range. I wish that I had something like Topstep TV that would explain to me how to do it when I was young. But yeah. Do I take multiple trades in different markets at the same time? Sometimes. Raphael is asking me, am I streaming comic settlement? Yes, I will be streaming today at 1 p.m. Eastern. That is 5 p.m. GMT if you're over on this side of the world. So yes, I will be streaming on my Market Stalkers YouTube channel. Man Cave Trades, quoting Hogue, we have to do our homework or we don't play. Yeah, Hogue was a big mentor of mine. So he is a big reason why I started to examine how I was approaching things. And I was one of those annoying students of his that was asking him a million questions. And I'm always like that. Like, whenever I'm popping into somebody's class or something, I'm always the one like, hey, how do you do this? And do you ever do this? And I'm very annoying. Because I want to know. I'm there to get some information. What size of the account do I prefer? I see a lot of professionals using 50K. So here's the thing. I think 50Ks are excellent for beginners. I prefer the 150Ks because it does allow me further down the line to get more contracts, because your contracts do scale. But from the beginning in an XFA, you usually have a bigger allowance in the sizes of the contracts that you can trade. And because of the changes that I've made on prop accounts and the approach that I'm trying to do now, I really need to have that ability to trade multiple micros on the first try if I'm doing like the trade at the time of day when I should be doing it. And then to add on to it. So if I'm in a 50K and I can only use 2 micros, that sort of messes with what I'm trying to achieve in a risk model. And I would have to start with 1 and that add 1, which is 100% add, which affects the average price too much. So I typically like to execute at least 3 micros in MCL and then maybe add 2 as it starts moving my way. And that is a pretty decent way for me, not for anybody else, but for me personally, to start building towards something that might be meaningful. And I mean, don't get me wrong, I don't live off of prop accounts anymore. I look at them as a cherry on top these days. There was a time when prop trading was my only source of income. Was that a great idea? I thought it was at the time. Then I realized how difficult it was because all of your mortgage, I've got 8 dogs, I've got a husband, and yes, he works as well, but he is semi-retired at this point. And, not having the security at my age of some money always coming in and your bills being covered, I don't know about you, but that affects me mentally. So when I was in a position to only do prop trading, it doesn't matter how big my monthly take was, whether it's 40K, 50K, 60K. It was always like, oh my God, but what if something happens? And and this is all the cash that I ever have. There's always that in the back of your head. It's like, it's so, I don't know whether it's just the security of having cash coming in regularly that you don't risk every day, but to me that was a big no. So I worked very hard over the last, I don't know, about 8 years in particular, to have other companies. So I have a company that has nothing to do with trading, and it's more to do with like property and stuff. And then we have a company that is trading, but is software development and mechanical trading algorithms, leasing our work to other institutions, just things that are, guaranteed cash, but it's still very much trading related. Then I have Topstep. I have a contracting role here as a coach. All of that kind of helps to alleviate the pressure that it's like you absolutely have to perform. And I always look at trading income as windfall, because that's what they are, right? And I can be doing amazingly well in my personal account. I will use that for nice things. I will use it to pay for doggy school, right, for my dogs. I will use it to get them ludicrously expensive raincoats. I will use it to buy, and out of Topstep payouts, I've gotten this entire computer, this camera, and these lights. So we're running literally on prop firm payouts. If I need something, if I let's say need an additional sort of 20K that I need to put towards something, doing something in the house tends to be quite expensive in the UK, even where I am now, which is south of England. I will then go into my serious mode, and I'll be like, all right, well, let's take this out of prop, right? So let's just put my game hat on, and let's make 20 grand in a month so that I can put that towards whatever I needed to. So, my goals have definitely shifted to that. But it's, everybody's in a different situation. So if you're a newer trader, a 50K combine is excellent. Why? Because it offers a very achievable target of 3K with a very decent amount of drawdown compared to that target of 2K. So your DTR ratio, drawdown to target, is what, 1.8 maybe? 1.5? 1.8? That's easy to achieve. But if you're working with, the 150K, first of all, you have to trade with some size. You will not be able to reach target in any due time. So unless you're just practicing and you're practicing consistency and you don't really care spending 3, 4, 5 months in a combine, that could be something to consider. But honestly, if you're not there, if I know that how much I can make in a month, right? Even on tiny size. It's always between sort of 12 to 16K on micros, right? If I trade minis, I would really need to have a bigger account balance, right? So to go to minis, I probably wouldn't be doing it until I'm at 50K. Actual account buffer, not the combined size that comes with a 2K balance. Because that's your drawdown, right? 50K is a good. I don't know why you call them professionals. Who are these professionals? And please don't say YouTubers, because those are not professionals, okay? I'm a professional because I have a Series 3. I don't know what the hell they have. So probably nothing. They have a code from a prop firm, which, I'm not against. I think it's great. Monetize, man. Monetize. All for it. But you can't claim to be a professional if you don't have a single professional qualification in this line of work. I do, so there's that. All right, so it doesn't seem like the value acceptance is on now. The hypo remains, right? The hypo remains. So I'm going to wait until COMEX is done. So COMEX initial balance to be done. And then I'm going to try again, but on maybe slightly bigger size because it's a better time of day for me. So I'm going to be looking at the next trade attempt in and around the Euro close, so 4 p.m. But if that doesn't come true either, I will then be doing my own stream, and in that case, we might be looking at crude oil. So I'm going to be doing my own stream at 1 p.m. Eastern. I don't have anything else on for Topstep. Oh, look, that's arrived. That's weird. And so if you are wanting to see me on Topstep, you're going to have to wait until tomorrow group coaching. I don't typically stream on Fridays because I have to do other things. So you come and pop in to my stream if you wish, if you want to see more of my face and talk more about the setups. In the meantime, I'm going to get out of here to make room for the daytime show. Enjoy. Be careful of headline risk. And, look, if this trade survives, it's just so crazy that it actually bounced. If this trade survives, I will just keep it, right? But if it doesn't, same hypothesis. So we're going to be waiting for a value acceptance of some sort as the COMEX IB ends, and then seeing how the market behaves. Do they want to keep going higher? Are we breaking out of the consolidation on the daily? So we'll see. That's all I have for you. Thank you for joining me. Market Stalkers, Richard. So let me just... VWeb George is here as well. He says every time I'm able to tune in, I always learn something. Great. Oil is pumping, but again, we have 95. Okay? We have 95 in the way. If that breaks, maybe some longs there. Again, we talked all about this in the beginning. So Gamma Wall is definitely an area where I expect some inventory adjustment. Whether it's going to be with the direction or against it, it really depends. But yeah, interesting day. It looks like we still have headline risks, so be safe, be careful. Enjoy the daytime show. This is the Metal Markets. I'm Market Stalker D. I will see you again very soon. Take care.